Markets were rattled by Iran-Israel tensions and were likely in for more volatility next week. The S&P 500 and Nasdaq led the pack with strong gains, while the Russell 2000 struggled to hit double digits. Energy is showing signs of life and could keep climbing. We're keeping an eye on healthcare and utilities as market might shift towards defensive stocks. Good news last week, inflation cooled across the board, with PPI coming in lower than expected and consumer sentiment soared. Next week's earnings are quiet, but we're watching Smith & Wesson, which could rally alongside other defensive stocks. It's a packed week for economic data, including retail sales, FOMC, core PCE on Friday, and existing home sales. Weekend trading for US Tech 100 is down 0.4%, hinting at a possible weak start on Monday. I'm Danny, by the way. Today we'll break down the technicals and macro trends for crypto and US stocks to get a clear picture of where things stand as we head into a volatile week driven by geopolitical risks and key economic data. So buckle up, this is one you don't want to miss. Welcome back, everybody, and as we can see, Bitcoin is currently trading below the 21 EMA, and we can see that this POC line is still below it. Now, that's very constructive. However, if we're going to see Bitcoin start to break down this level, we can anticipate that we could probably test this 100% extension or the 1.618. Now, Bitcoin's hash rate is pretty strong at the moment. We're seeing here that the network is actually really busy, and to me, that says a lot that there's a lot of interest going on here, and that if we're going to see Bitcoin start to gravitate towards these levels here, that could perhaps mean that we could see Bitcoin starting to react to higher yields. Now, currently, Bitcoin is defying this trend. And what I mean by that is that when dollar goes down and yields goes down, it's typically good for risk assets. However, when the dollar goes down and yields goes up, we haven't really seen Bitcoin in those situations. So maybe we're seeing here that Bitcoin could react to higher yields, and that is why we perhaps could see a correction playing out here. Now, if we're seeing a correction, we could see this thing again start to gravitate towards the 100% extension here, or worst case scenario, the 1.618. Now, if we're going to see Bitcoin moving lower, in my opinion, that could set the stage for an altcoin season. But a lot of people like to mention that the altcoin season is over. Well, I would be a little bit cautious with that, because we can see here when altcoin transfers to exchanges reaches peaks, that's typically the end of the altcoin season. However, we're nowhere near that now. So we want to see this thing start to rise pretty steeply here towards the upside before we can call it a day for altcoin seasons. That is why if we're starting to see Bitcoin moving down here, maybe that could be the start for an altcoin season to begin. Now let's take a look at Bitcoin here on a weekly chart, and as we can see, there are some speculations here that we could be on the move for something along the line what happened back in 2021. Now, to be honest with you, I'm not really sure if that's the case, because if we just take a look at Google Trends here, you can see that typically the trend for Google spikes up pretty hard before we see the top in this market. And we can also see that when it comes to the cycle performance here for Bitcoin, typically the cycle lasts to 1000%. So here back in 2015 to 18, it was 1076, 1822, 1000, and currently we are at 656%. So there's still more room towards the upside here to really call it the day for this cycle to end. So that is why there is a lot more room towards the upside, in my opinion. However, everything can change, so we want more confirmation before this break is going to happen. And obviously, as long as we're above these key moving averages here, there's nothing really to worry about. If we're starting to break below them, yes, then we have to reevaluate and see where Bitcoin could be heading next. Let's move on and take a look at Bitcoin here on a monthly chart. And obviously the most important trend line here is going to be this. And we're seeing here that this trend line here has been steady ever since the inception. And eventually I do believe that we're going to break above it and set the stage for a new cycle. Now, you have to remember that a trend line gets weaker over time, right? So if we invert this, and we can see here, we have tested this trend line so many times now that it just sets the stage for us to break above it at some point, perhaps retest it, and then set the stage for another cycle up. So we had a couple handler here breakout. We're testing the former highs here. Everything is looking constructive, and we're above these key moving averages here. Obviously, we could get a dip here, but for me, I'm not getting bearish until we are below the $70,000. Anything above this is bullish in my opinion, and we're going to see Bitcoin go beyond 100,000, 200,000, 300,000, and so on. If we take a look at the PPO here, for instance, we're not that elevated as it was. So in my opinion, there's no reason to be shaking out here. And with all this geopolitics geopolitics stuff happening right now, it could be a buying opportunity, right? So this is how I'm looking at the markets. We'll look at the Bitcoin here on the daily chart just to see how things could react short term, and then in the intermediate term in the weekly chart, and here on the monthly chart. So I think this is really interesting here. This is a long-term view, and in my opinion, there's nothing really to worry about as long as we're above this level here. So let's also take a look at the chart of Ethereum. As we can see here, we are currently trading above this important 233 EMA. So as we saw with Bitcoin was trading above the POC line, Ethereum is below it. Now we could see a rotation where Bitcoin sees some distribution and then the altcoin market starts to pick up some steam. Now, the only negative thing here is that on Friday, we did saw for the first time after 19 days outflow here for Ethereum. So, you know, it was basically due to the fact of the tensions here between Israel and Iran, and obviously it's going to impact markets and crypto prices in general. So this could be just a one day event here, but we do believe eventually prices will move higher. Reason being because of these gaps here, right? So these are futures gap, and the futures market left over these gaps here. So there's a high possibility that we could see Ethereum start to fill these gaps, and then we'll see what happens next. So we'll watch Ethereum very closely here. This is a level to watch here, the 233 EMA on a daily chart. So we can also see here on a weekly chart that the RSI is nearing a breakout right here. And if we get above the 55 EMA here on the weekly, that would also confirm that Ethereum will likely to go much higher. And above that level, we will set the stage for also being above this POC line. So that's very key. Another thing to notice is that the PPO is very oversold. And last time it was this oversold, it set the stage for a massive bull run here. So this is something not to ignore in my opinion, and that Ethereum could be going much higher than previously thought. So lastly, when it comes to Ethereum, we're going to take a look at the inner markets relationship between ETH versus BTC. And we can see here that we are in a very extreme low levels here, especially the RSI. So this could set the stage now for a massive bull run to start. Now, one thing to consider here is that we have broken below trend here. So while this is higher highs, it means that this cycle has reset now. So it could mean two things. Either Ethereum is consistently now going to underperform BTC, or this cycle is now reset and we could now see Ethereum break to new highs, maybe retest this high here and then move higher even further. So it could either be very bullish or very bearish, but we're watching these levels obviously, and if we get a break above this trend line here, that's going to confirm the future outlook here for Ethereum, and that in itself can set the stage for altcoins to perform for a very long time. So let's move on and take a look at traditional markets here, and right now we're seeing the contracts for the S&P 500. Now I think this chart is pretty important and a reminder that markets tend to go up no matter what happens in the world, right? So we do have history here of 1929, Great Depression, we have World War II, Vietnam, Cold War, tech bubble, COVID, Russia invades Ukraine. The market doesn't care. It finds a bottom and then just keeps on moving higher. So this conflict going on here is just a reminder that the markets doesn't care and they just moves up higher. However, we always want to take a look at where things happening short term, and we can see here that the S&P 500 is starting to build up this rising wedge here. Now we are in the camp here that we believe that this wave 5 has concluded. However, I could make the case that it could conclude much higher level, and that I could place this wave 3 here at this level right here. So we're watching this rising wedge here. We do also have a negative divergence here on the RSI. So if we're getting a breakdown here, we're likely going to see markets getting bought. And so we're looking for any correction to either find support here at wave 4 or at these moving averages here. Now, typically when you see the S&P 500 experiencing a sharp sell-off and then it nears its 22 times forward, based on historical data, it shows that returns slightly improve and become less volatile when valuations rise back up from 21 to 24. It's just a reminder that markets tend to be less volatile the higher the valuations go, and that is why I believe at some point earnings will also start to catch up. We're also seeing a lot of cautious investors here, and this is Goldman Sachs US equity sentiment indicator, and it's currently at minus 1.3. So people are still cautious despite this massive rally we've had, and so it's just a matter of time before these bearish people turn positive and bullish, and that's going to drive up the S&P 500 much higher. Now on a weekly chart, we can see here that if we're going to get a correction, the 55 EMA here looks to be a good candidate. And so we can see also that the money flow has also been pretty strong. We got a breakout here from the money flow indicator, and that should support further upside if we get this correction here from this rising wedge. Now, if you take a look at soft data and hard data, and we can see here that soft data is now starting to catch up to hard data. So soft data has been this lagging indicator, and that is why any correction here from the S&P 500 is likely to be bought, as investors will realize that the economy is improving. We're also seeing here that the University of Michigan, it's rising. This looks like a very bottoming signal here, and that's also going to provide investors with the clues that the economy is showing signs here of recovering. So technically speaking, yes, we could likely see a correction from these levels here. This could also be a double top. And so we would not be surprised to see some selling here before breaking out from this resistance line here, likely retested as well, and then we will move up to new highs. Let's also quickly glance over at the Russell 2000, and we can see here that we do have solid support right now at the 55 EMA. This is a daily chart, and that we are likely going to see this one break above the 233 EMA here. So it's been this area where bulls and bears have been fighting now for a very long time. However, we can see here that we're still above this trend line here, and this just sets the stage here for just a retest of this trend line. And we believe once this 233 EMA has been broken above, it's going to fuel the Russell 2000 and small caps in general to enter a new bull market, and we're going to likely see new highs this year for the Russell 2000. And with that said, we remain very bullish here for smart caps. Let's move on and take a look at the VIX, and we can see that the VIX has successfully found support here at the 100% extension, just like we predicted in a previous video. And so it looks like the VIX has built what looks like to be a base here, a 1 or wave 2 pattern here, and that could set the stage for higher volatility in the market. So currently we're watching this 55 EMA, there's this green line here, and if it looks like that we are testing it and staying above it, it could also set the stage that we are breaking above this resistance line here, which has been key. So there are a bunch of economic data releases this week, so that could translate into more volatility in the markets, and so that's actually key to watch. However, if we do get a rejection here, I do think that we could be on tap to close this open gap here, and then we'll see what happens with the VIX and the markets after that. So in the context of the S&P 500, that rising wedge that we saw, it could translate to a breakdown if we see the VIX start to rise from these current levels. Let's move on and take a look at the commodity space, and right now we're looking at crude oil prices, and we can see here we had a trend line breakout but also a rejection, and it's also trading below the 233 EMA. However, it's not yet confirmed if price is trying to stay above this level. So we can see that the RSI has officially broken out here from this trend line, and that could signal higher prices in the future. So we're watching the geopolitical tensions here because that remains a very key factor. In general, higher crude prices could spark recession fears. So we're closely watching this 55 EMA as well. If we're staying above that level, that means that there's a risk that the crude oil could be moving much higher. Let's take a look at the chart of gold, and as we can see here, it's attempting to break up to new all-time highs amidst all this geopolitical tensions and a flight to safety. We can see that PPO has flashed a buy signals here, and we're still waiting for this confirmation or breakout from this level to really confirm that we are moving towards new highs. However, we can see that the volume profile here of the value area lows is still acting as resistance. So if we're getting above this level here, that could give us some early signs that we are eventually going to get a breakout, and that gold will resume higher towards $4,000. Moving on to the US dollar, here's a large or big picture view of the DXY on a monthly chart, and we can see here that the dollar remains very bearish here. Basically, it's been down every month here ever since January of 2025. So we remain very bearish here on the US dollar, and it's just a matter of time before this trend line here gets broken down, and that will end a secular bull market here for the US dollar. However, we do believe eventually it will find support here, and we will resume higher at some point in the future. And so moving on to a daily chart here, we can see this POC line here. Now there's a chance we could retest it before resuming lower. So short term we could see some volatility. There's also an open gap here, so there's a possible scenario where we have these gaps getting filled, and then we could see further declines here in the US dollar. Now generally A weaker dollar should support risk assets in the coming months, so a weaker dollar should be good in that sense. So we're pretty oversold here on a weekly chart, so any bounce here should not be a surprise, especially retesting that POC line we talked about earlier. Let's take a look at the 10-year yield, and as we can see, we had a rejection here of the POC line, and currently we are still trading above this 233 EMA. Now, if we take a look at the yields here on a weekly chart, we can see that it has respected the 55 EMA here. And so that means that if we're going to get a confirmation here for yields to move lower, we need a break of that 55 EMA. So currently we are trading above this level, and any break below this would signal that we would get lower yields ahead alongside the US dollar. Now, eventually we do remain a little bit cautious here how low yields would go. So we're looking at two targets here. The first is the 100% extension here, which aligns with the value either lows of this volume profile. And obviously we do have the 1.618 extension as well. So we're closely watching yields here. We do believe that the bias is towards the downside here because we're going to get a break of the dollar as well, and so yields should come down, and that would also support risk assets as well. So that was pretty much it for today's video. Keep an eye on the economic data releases and how the VIX reacts to them, and see if that S&P 500 breaks its rising wedge. So we are long-term bullish, but short-term volatility can obviously surprise. However, always remember that Dow chart I showed you earlier. I hope you liked the video. Subscribe if you haven't already, and I'll see you in the next one. Take care for now.